All right, what's going on, everyone? Welcome back to the channel and welcome to the stream. My name is Jonatan Randin. I'm the senior market analyst here at Prime XPT, and thank you for tuning in today. Before we jump into the live stream here today, I would like to just ask for your help. There's three things that I want you to do. Actually, let's make it four. First, let me know if you can hear me, and let me know if you can see me. Pretty sure you can see me. Number two, I want you to write in the chat. I want to see where you guys are tuning in from today. And thirdly, I want you to hit the like of the live stream. And fourth, click that subscribe button as well. Let's add a fifth step to this as well. I want you to enjoy today's webinar because I know I'm going to. Even if there's a bear market in crypto, question mark. People talk about a crypto winter. There's other markets we can trade, right? Even though there's a lot of volatility in crypto. I mean, as traders, investors might be looking at this and say like, maybe I want to be buying for a long term, but traders are loving this. It's not just the volatility in crypto I'm talking about. It's the volatility in gold, in silver, in the EUR USD, the Forex market, in the stock market. Everywhere's volatility, the indices everywhere. We got a lot of volatility. Right, great. You can hear me, you can see me. All good. Welcome, Colin. Hope you're doing good. Welcome, everyone. Let's jump straight to it here. Right, so okay, we got if you've been anywhere near the crypto markets over the past few weeks, then you already know that it's been absolutely brutal. We've had the Bitcoin dropping from the all-time highs back in October all the way down to 60K. Let's see, how big is that drop? Was it 50%? I think it was close to 50%, right? So let's see, we got from the 120, we got 126 high down to the 59.9 low. That's a 52.54% drop right here on Bitcoin. That is massive. And we also know we got the fear and greed index hitting the extremes here, giving us an extreme fear reading. Let's see if I can pull up the live numbers right now while we're here. Let's see, crypto fear and greed index is at a 9 right now. We're looking at a 9. That's extreme fear. And I believe we also had, yeah, we had it at very, very low. It's a little bit higher now, but we haven't seen Bitcoin at these levels for a very, very long time. All right. We had also massive leverage position getting liquidated. It's officially being called the crypto winter. Do you guys think, are we in a bear market? I mean, are we in, is this the bear market? Is this the crypto winter that everyone has been talking about? Or are we going to reclaim that 70K region soon and maybe eventually that 85K resistance level here as you have on the upper red horizontal line here on the chart? Let me know in the comments if you do think that this is the end of the bull market, or is it a temporary move to the downside? Now, we do have a lot of traders, they're seeing this and they're thinking, well, I guess I could just sit on my hands and wait. A lot of crypto traders are probably taking a pause here, figuring out what to do with their investments. Are they going to be buying all coins, buying more Bitcoin, or they're just going to wait and see where the bottom comes in? But, I want to challenge this mentality today, because while the crypto market has really been crashing, we've had other markets seeing some insane volatility and creating huge opportunities. We've had, for example, gold has been absolutely on fire, while Bitcoin has been sideways and is dumping to the downside. So if you're a crypto trader, you missed out on a historic bull run in gold. of the likes that we have not seen, I believe, since the US went off the gold standard. We've had EUR USD hitting a 4-year high, right? And we have massive volatility on EUR USD as well. I'm going to show you a setup I'm watching today on EUR USD as well, break that down. We've had massive moves on the Nasdaq and the S&P 500 as well. So there are a lot of opportunities everywhere. You just need to look beyond crypto to find all the opportunities. And that's actually the whole idea behind what we're doing here at Prime XPT right now. And the point of this whole idea is if you can read a Bitcoin chart or an altcoin chart, then you can read a gold chart. You can read the S&P 500 chart, the Nasdaq. You can read a stock chart. The skill that you've accumulated in the crypto markets transfer over the traditional markets. We have, the indicators are the same. The levels are the same. The only difference is how the markets operate from a fundamental perspective. But as traders, especially low time frame intraday traders, we're using technical analysis most likely. We don't really care about, how the underlying markets are moving for us to trade level to level. We care about our statistics, we care about our system, and end of the day, we care about our P&L, right? Now, in today's webinar, we're going to break down what, or at least some things that I believe might be driving the crypto crash. And we're also going to be looking at gold. We're going to be looking at EUR USD. We're going to be looking at Nasdaq, S&P 500, and do a overall market scan here to see if we can find anything interesting. And I want to teach you something about the RSI as well that most traders don't know. So stick around for that one as well. And if you haven't checked the Prime XPT blog already, make sure that you do so. I do post technical analysis articles with the best level to watch across all of these markets that we're going to be looking at. So I will be dropping a link to that in the chat later in the live stream as well. All right, so let's start with what everyone is talking about here. We're talking about the crypto crash. Okay, so let's pull up Bitcoin here as we have here on the screen right now. And by the way, guys, make sure to hit that like as well. The more you hit the like, it's a small gesture from you, but it really does mean the whole world to me because it does activate that YouTube algorithm, and we tell more people to come in here and enjoy the knowledge that we're dropping here today. Right, so what actually caused this? We got a few things coming together at the first time, at the same time. So first we have Kevin Warsh, the nominee, got nominated as the new Fed chair. Now this is a potential hawkish signal. He's seen as the so-called hard money guy. We had the dollar moving higher on that news. We can go to the dollar to actually check when that actually happened. I'm just looking at the exact date where Warsh got nominated. Let's see. If you guys remember in the comment, you could let me know, but I think it was on the 30th of, was it 30th of January? Was that long ago, really? Did it be? Yeah, but that happened on, let's see, 30th, that was on a Friday. So it'll be 30th of January. Sorry, my watch is talking to me here. Yeah, okay, so let's go in here. We got the weekly, got the daily. Yeah, so you saw a huge move up on the dollar right here, right? And when the dollar moves higher, that's considered a risk off move, right? And in those scenarios, when the dollar moves greatly to the upside, we're going to see risk assets like Bitcoin and the stock market, etc., move to the downside. So we're going to pinpoint this here and say that we got January the 30th right now. And then if we go to Bitcoin, let's see what happened there on the 30th of January. Well, that is right here. Now, of course, as you can see, this is a significant time in the price of Bitcoin. We can kind of tie these fundamental happenings to the price of Bitcoin. We had the dollar moving higher. Bitcoin moving lower. Not only did it move lower, this is the time when we broke below that 85K level. Very, very important level, which also shows that the event was important. And secondly, we have had massive ETF outflows. We have had institutional demand has basically reversed. The US spot BTC ETFs have turned negative for 2026, and that's a big deal because the ETFs were the main driver of new capital flowing into Bitcoin last year. And then thirdly, of course, we have the geopolitical backdrop. We have, you know, the US-Iran tension, and of course we had the Greenland situation. You can't forget about the Greenland situation, right? That was just an insane time. Not very long ago. It feels like forever, because in these times of Trump, there's just these massive volatility events that is happening on a weekly and sometimes a daily basis. So what happened 3 weeks ago feels like forever, but it's important to remember that we live right now in extremely volatile times. This is a good time to be a trader, a wonderful, wonderful time to be an intraday trader, because there's just volatility all over the place. And of course, with the, we got the Greenland situation, like I said, we had a tariff threats, and this kind of uncertainty is where, in theory, Bitcoin should shine like the digital gold that it was talked about to be, but obviously it hasn't. It hasn't. Instead, money has been flowing into actual gold. Who would have thought that gold would actually act as a digital gold? It's been flowing into risk assets. It's been flowing into gold, and Bitcoin is, trading like a risk asset and not a safe haven. And talking about the relationship here between, because I feel like Bitcoin is kind of stuck in the middle, right? We have the AI hype. Yes, the stock market has been falling on these recent developments as well. But if we overlay on Bitcoin, the S&P 500 here, we got Bitcoin in white, and we have the S&P 500 in blue. It is quite clear to everyone watching here that the S&P 500, the US stock market on average, has way outperformed Bitcoin for a long time. We had the decoupling or decoupling, however you pronounce that word, that happened in the end of last year. And since then, Bitcoin has just been falling, and the stock market has been holding up relatively well. And from what I'm seeing here, a potential for that is, and of course we can let's overlay gold here as well. So what we can do here is we can actually change the color of this line to orange, because, Bitcoin. And then we're gonna change S&P 500 to white. We're going to remove all the drawings and indicator. And then what we're going to be adding now is let's add gold. Now, if Bitcoin is orange, what are we going to be adding gold for? Let's add gold as yellow. Okay. No, let's just use green. So what we're seeing right here is gold just absolutely shooting to the upside. So we had for the first initial drop here on Bitcoin happened around the same time as gold, but then gold recovered. Okay, gold recovered, the S&P 500 recovered, but Bitcoin never recovered. So I'm going to try to explain this divergence between these three crucial assets. We have Bitcoin, risk asset. We have the S&P 500, risk asset. And then we have gold, a risk off asset. So when gold is moving higher, then traditionally you have risk assets not moving as much higher, ranging and maybe moving to the downside. So the relationship between gold and Bitcoin kind of makes sense here. But then why isn't the S&P 500 falling? Well, it's spelled AI, okay? The reason why the S&P 500 is trading up here and not down here with Bitcoin is because of these two wonderful letters. AI, artificial investments, not artificial intelligence. And then down here, we got gold. Why is gold rallying? Well, it's rallying because of currency debasement and geopolitical risk. Let's turn that beautifully green. Okay. And then why is Bitcoin falling? Bitcoin is falling because of no AI impact and geopolitical risk. Does this make sense? Do you understand what is happening right here? We got the S&P 500 right here. It is rallying because of the AI hype, the promise from AI to make the economy great again, right? The U.S. economy, the productivity is at all-time highs, and AI is going to revolutionize everything, and everything's just going to become wonderful, so that all the companies in the S&P 400 is going to be making more money because of AI, and everything's just going to be wonderful. So the stock market is rallying on the hype of AI. And then gold is rallying because of currency debasement, threats on increasing inflation, dollar weakness, people fleeing the US, fleeing the dollar to look at alternative investments, and geopolitical risk. And that all began with the situation in Ukraine. And then if we look at Bitcoin, Bitcoin is trading down here because if it weren't for AI, we would be in a recession. We would be in a bear market. The S&P 400 would be down here as well. But now we have AI that is driving the markets higher in the US and the global markets and the promise of AI. But the geopolitical risk is so strong that it's pushing Bitcoin down, and Bitcoin does not have any positive effects of AI. Like AI is not going to revolutionize Bitcoin. Bitcoin is not going to be revolutionized. Bitcoin is a revolution in of itself. It's a very old one, right? Isn't it like 15, 16, 17 years old, this idea? Maybe people are starting to question this. If it's not a digital gold, then what is it? What's actually the use case for Bitcoin here? It's a little bit of a problematic situation for the Bitcoin maximalist out there right now, I would say. But this is the overall breakdown in very simple term of what's happening right now between these very crucial assets. Okay, let's remove gold. Let's remove the S&P 500. Let's go back to a view that we actually understand. That is the candlestick chart right here. Right. What about XAU USD? Yes, what about gold? We're going to be looking at gold in just a bit. I just want to be clear on, make myself clear on something. We've had a plus 50% drop on Bitcoin right now, and this is not the first time we've seen this. Bitcoin has had drawdown of 70% or more, I believe more than maybe 3 times or so in the past decade, and it's recovered every single time. Now, analysts are watching these key support levels right here, and but today is not about calling the bottom on Bitcoin. The point here that I want to make very clear is that if you're waiting for crypto to recover, there are other markets moving right now, and you can trade them with the same skills that you already have. So let's actually look at what's working right after we take a look at the lower time frames here for Bitcoin. So right now we see Bitcoin, after dropping down to 60K, we have huge buying pressure coming in at this 60K region right here, and we are going to look at the lower time frames here with a weekly 200 simple moving average here as well. No, that's the EMA. Where's the 200 simple? The 200 simple is right here below 60K. Give it a week or two and we might have that 200 simple on the weekly right on that 60K region right here. Huge huge support for Bitcoin, a level that tends to hold even in bear markets. Going into the daily, this is what we're working with here on the daily. Huge daily candle on the move from that low. The range of this candle is massive, almost 20% range on that daily candle alone. Huge volatility. What we see here on the 4-hour is we have a strong push from 60 straight up to 70K. We have a strong bearish engulfing candle here on the 4-hour, telling us that yes, there were a lot of selling pressure coming in this area, which is no surprise at all. Resistance usually acts as resistance. We have a higher high here on the 4-hour time frame, a peak above here. I would say technically a higher high, but I would look at this from a discretionary point of view. I would look at this as an equal high, and then we have that low right here as well, which could potentially be a higher low. So what we're seeing here is low, higher, low, potentially equal highs or even higher highs. The local structure is somewhat bullish, but a lot of resistance here. So what I'm looking at here, we're forming a range right here now on the around the 70K region. Going into the 1-hour, we would need to see a break in either direction here for the next definite move. I do think that a break below 68 would cause an impulse move to the downside. A break above 72-ish would cause an impulsive move to the upside. Reclaim that 72K region, and we're looking at the regions around 85K as the next major high time frame resistance above. And then of course we have that low time frame range. We break to the downside, which would be around below 68. We got that 62K to 60K region in play again. But for the intraday traders, this is a scalper's paradise right here. Look how price came down, hit this support right here, printed a 15-minute bullish engulfing candle. We get that momentum coming in. Maybe we're going to come up and test this level before we maybe move down to the downside. So for the active intraday traders, this is fantastic right here. All right, let's move on. Let's take a look at gold. Everyone's favorite gold. All right, everyone's favorite gold right here. Let's take a look at this. Let's remove some levels here. I think I can remove some of these older levels I have on here, but I'm gonna keep the ones I think it's important. Right, okay. So on the screen right here, we have two exponential moving average. The first is the blue one, that is the 20 EMA, and then the one below is the white one, that is the 50 EMA. Let's go, is that a 50? That is a 200. This is, right, okay, the blue is the 50 and the white here is the 20. Apologize for that. So the 20, change the order of those, so perfect. What I see here is we've had one of the biggest move to the downside on gold in, I think, forever, which is a over 20% to the downside in only 3 days, which is just crazy. And we have nicely recovered now. Now, what I like is we came down and we hit this level right here. It's very simple stuff, right? Gold came down, hit the area around the daily 50 EMA and bounced nicely on that moving average right there. And then it recovered quite nicely. We have on the daily here as well. I view that wick as, now there's two ways to look at this. Now, technically, if we're just going to look at this from strictly technicals, then this is a higher low. And we can add a trend line like that, right? So it is technically a higher low. But what I'm looking at as well is where are the other price action around? Do we have like a clearer level where we might put in a horizontal support, and then we look at that big wick as a deviation below that support, something like that. So we have a huge move to the downside. This move was overextended, went further down than not what it should have done, because it did what it should have done. I mean, the markets always do what they should do and want to do. But we have a support level here marked out with that previous wick right here. And that previous wick right here is in the same area as the current, that wick on that one. So I don't necessarily view this as a higher low. I view it more as a ranging structure with perhaps equal lows. And then we have a type of range forming here on gold. And we're testing the range highs right now. So let's go into the 4 hour here. Before we go continue with the technicals, we've quickly mentioned why some potential reasons for gold to surging to have this insane bullish price action. Now, gold is, as you guys know, it's a classical safe haven asset, and this is a classical safe haven trade. We have geopolitical tensions, like I talked about. This has elevated across the board. Like I mentioned earlier, we got the US, Iran, the tariffs, things like, you know, the Greenland situation. And then we have central banks around the world are probably buying still, but they bought a lot at record paces. And there's people like Ray Dalio warning about a capital war where countries kind of weaponize money, and in these situations with the dollar debasement and the currency debasement, all that, gold is really the safest asset. It's a hard asset that, in this situation, gold is always going to be gold. Now, what's interesting here is the comparison of gold and Bitcoin here is quite interesting, because there might not be competitors in the way that people think, and they might be more complementary, right? Now, gold is, like I said, it's the perfect safe haven asset. It's a proven safe haven asset during geopolitical stress. And Bitcoin could potentially, and we've seen some signs on this, and I'm working on some research on this that we're going to be publishing on the blog in the future. It's a big piece, though, so it's going to take a while probably. But we are seeing some signs that Bitcoin might be a potential hedge against systemic financial risk, which is very interesting, because Bitcoin launched as a result of the 2008 great financial crisis, right? And we're talking about currency debasement here. That is one type of systemic financial risk. But right now, in this environment where risk is mostly geopolitical, gold is definitely outperforming, because that's basically what it does. Now, as you can see right here, when I looked at the daily, we talked about this potentially being just double bottoms, right? Just a support region. But what's very important here is the context, right? It's important to see what are we seeing on the lower time frames as well, right? So I view this as a potential double bottom on the daily, and it would be the case if this wick is just one straight move on the 4 hour as well, maybe even a wick on the 4 hour. But what we see here on the 4 hour is something that now looks more like a higher low, because what happened here on the intraday price action, we actually have some type of, you know, this is actually some type of horizontal level. So it's not really just a straight up V-shaped recovery. We actually do have a move to the downside, resistance, and then a higher low here. And this is then actually an established horizontal level, and price then comes down, hits that level, and used it as support. So now I am actually looking at this as a higher low. And what we're looking at here for gold could potentially be an ascending triangle, right? So if we add a resistance level right here, which is also going to be the upper region of this range. And the reason why I still have this range on is because I still view that as a SR level. SR stands for support and resistance, right? So price comes down, deviates, comes below the level, resistance, reclaims, support. And then what we can do is we can use the rectangle tool, no, the channel tool here, the parallel channel tool here. Just drag it up like this. And then instead of using a trend line, we can use this channel tool, sort of like a trend line with a little bit more room for error. And what I see here now is a potential ascending triangle type of pattern. Interestingly enough, let's see where the measured move of the ascending triangle will take us. And for those of you who are not aware of the measured move is when you measure different patterns will have different breakout targets or trade setup targets based on the formation and the structure of the pattern. And the way you measure the target of a ascending triangle like this one is you measured from the low of the entry into the target. So you get the entry into the pattern and then the lowest low where the first touch of the future trend line is. So this is that low up to the high. And then simply what you do is you just copy that one and put it up here on the breakout level. And that would then be the target of this ascending triangle. Now, what I would do is I would be more conservative. I would take that candle close instead because that looks like true support. And then I would just take the average high like this level right here, which I think looks like a better resistance. And then I would simply copy paste that one. What you get now from the breakout level is a level right here, which aligns perfectly with this resistance. So if gold breaks out here, one of the trades I'm looking at from a swing trading perspective is a move back up to 5,538. And that could happen in the next few days or even today. Now, dropping down even lower, can go into the 1 hour. We see now also a level right here where we have historically respected that level. And then we had a major move to the upside once this level broken. We then reclaimed that one. I'm going to be watching this one as an important level, as also range low. What I'm going to be doing is I'm going to be adding an alert right here. And I'm going to be adding an alert right above that one as well. Because if we break below that level, I might be looking at a move back down into the trend line area. And then if we break above this level, might be looking at a move up towards that target. And this range creates a very good risk to reward setup. Again, nothing that we say or do here is financial advice. Always do your own research. So the way I look at this is this now creates a wonderful risk to reward setup where if we get a breakout of that range, come back down and retest the range highs, we might see that continuation to the upside. And speaking of break and retest, and of course, before I move on, it would be the same kind of like if we get that move to the downside, just the risk to reward here would be smaller because the targets would be closer to current price. But speaking of break and retest, I want to show you something on Euro USD. Wow, that's a big move. It's a huge move on Euro USD today. Man, I completely missed this one. That's a shame. I can't believe I wrote an article on this setup, posted it to the blog, and then didn't even take the setup. That's a shame, but this is very, very good. I think we there's some entries that we're watching here as well. So I'm going to be breaking this down with you guys. All right, there we go. So first, I'm going to be linking the blog post. So you can go in and read on the Promise blog. You can go in and read the full breakdown of the analysis that I did this morning, and make sure that you go in and check the blog every day. Every day there's going to be a new. Not sure if I can call it trade idea, but it definitely, yeah. What I'm sharing here with you guys today was posted in the blog this morning, so definitely go in and take a look at that. So now, if you've been following this pair, USD, you know that on the 27th of January, around this time right here, we had 4-year highs of around 1.2080, and that was obviously a significant move. But what has happened since then is arguably even more important from a technical perspective. So after bouncing on the daily 200 EMA on the 19th of January, right here, the EUR/USD saw an explosive move to the upside. As you can see right here, moved from the 200 daily, and it broke above that critical 1.18 resistance level, which is also the range highs. And then since then, price has retraced down to retest the 50% Fibonacci retracement level of that move, which also happens to line up with the previous range highs, a range that was first established all the way back in June of last year. So we're talking about a significant long-term rectangle pattern here. An old resistance is now flipping to support, and it's just a lot of confluences here stacking up in one area. And we also got good volume, as you can see here, on both the breakout, and now we got some nice volume coming in on the retest as well, and that's exactly what we want to see. What's interesting here is as well, we got the fundamentals are lining up quite nicely. We have the ECB, they're holding rates at 2.15. The Fed is at, I can't, what's the exact number? About 3.5, 3.7. I can't remember the exact number. But these markets, they're pricing in and growing odds of a cut, and that's a rather narrowing rate differentials, and it's a structural tailwind for USD. And then you have a lot of major banks like Deutsche Bank, UBS, Goldman Sachs. They're all projecting this pair Euro/USD to reach 1.20 to 1.25 by the end of the year. Now, what's interesting is if you zoom out, look at the weekly, that high time frame target sits right here at this high time frame resistance area where we formed the high here in February of 2021. Now, what's interesting as well is we have the local reload zone. Now, the local reload zone was created using the fib tool from this low to that high. So this is the local breakout move that I'm going to be watching on the 4-hour here soon as well. So there's a lot of confidence in here, and you can see that price is now bouncing in that area. And this is a pair that I've been following for a very long time. So in all of these live streams, if you follow every single live stream and check out the blog, you would have known about this weeks and weeks ago. This is something that I've been covering on our different channels for a very, very long time. You can now see on this daily candle that this setup indeed has confirmed, and it's looking very, very good. And something I want to quickly just show you guys. Let me see if I have. Let me just. Where is that one? All right, so I want to show you an image here. Hopefully everyone can see this clearly. I want to talk about something here with the RSI, something that now a lot of people don't know about in trading. So Cardwell's RSI range shift. Most people, they use the RSI to look for overbought above 70 and oversold below 30. And that's just, that's basic textbook stuff here. But there's a much more powerful way to use it, developed by a guy called Andrew Cardwell, often called Dr. RSI. Now, what Cardwell found is that RSI doesn't oscillate through its full 0 to 100 range equally. Now, it's gonna be shifting depending on the trend. So, in a bullish environment, the RSI will tend to operate between 40 and 80. And the 50% level can, in this case, act as dynamic support. So when price pulls back, the RSI dips towards 40 to 50, but it holds there, right? And that could potentially be your buy zone. And then the rallies, they tend to push the RSI up towards 70 to 80. And if we flip this around, as you can see here on the image, in a bearish environment, in a bear market, the opposite will happen. You have the RSI is going to operate between 20 and 60. The 50% level then becomes resistance. Rallies push the RSI towards 50 and 60 and fail. The decline will take it towards 20 to 30. And that brings me to the next image here. So what you want to do to really spot this shift is when the RSI has been operating in that bearish 20 to 60 range and then suddenly breaks above 60, and more importantly, the first pullback holds above that 40 to 50 zone, that's your signal that the range potentially has shifted from bearish to bullish, and that the reversal that you're seeing in price action might be true. And that's exactly what we're seeing here on EUR/USD on the daily chart right now. So after the pullback from 1.2080, you can see right here, you have the RSI operating between this area and then pulls above the 50 line, comes back to the 50 line, but it doesn't hold in this 50 line, right? And it uses this general area as resistance. And then price pushes above, right? And the 50% and RSI found support right around this 50% midpoint. It didn't collapse into the 20 and 60 bearish range. It held above 40. It bounced and it's now pushing back above 50 as we have that break and retest in price as well. And according to Cardwell's framework, this tells us that the broader uptrend could still be intact and the pullback was just corrective and not the start of a reversal. And that's it's a big deal. Now, let's go into the 4-hour. I'm just going to remove the daily drawings here. And we're going to be moving into the 4-hour. Where do I have all my 4-hour levels? Here. Okay. So this is the 4-hour right here. And it hit that measured move perfectly. That's pretty crazy. Right. Okay. So we're in the 4-hour right now, and we've also got that double bottom formation sitting right inside this reload zone. And the measured move target from that double bottom sits around 1.19, which aligns nicely with the short-term target as well. Now, remember what I said with the measured move, right? The ascending pattern, the ascending triangle pattern, we measure the move from the low to the high. In the double bottom formation here, we measured from the low of the formation to the neckline, and the neckline is the resistance of the W, and then we take that, we double that, and then we look for targets to the upside, and it just perfectly hit that target right now. And again, this is the setup that I shared on the Prime XPT blog earlier today in the morning, so make sure that you go on the blog, read them every day. So basically what you got here is the daily retest. The daily break-in retest is holding a candle RSI. Range shifts suggesting that we do have that bullish momentum being intact. We got a 4-hour double bottom, adding a little bit of low time frame confirmation here, or a medium time frame confirmation. We got good volume as well, and a macro fundamental backdrop that really supports this move. And yeah, that's just a lot of confidence here. Again, I want to be clear that this is my personal analysis. This is not financial advice, but I think it's a great example of how the exact same technical analysis skills that you use in crypto works perfectly in Forex. We got the same RSI, we got the same Fibonacci levels, we got the same sharp patterns. It's just a different market and more opportunities, basically. Okay, so let's go over to the stock indices. And by the way, you guys are probably asking now, but what this doesn't help me. I'm not, I missed this move. I'm not in EUR USD right now. Well, if you look at this right here, it's now trading above that 1.18 level right now. A pullback down to 1.18, 1.186, or eventually down to the neckline of the double bottom could be great buying opportunities. But again, not financial advice. You know what you're doing. Apply your own system and your own rules to this. Okay, let's move on to the indices. We're going to be looking at the Nasdaq, of course. We have, and I just sent out not a signal, but a notification saying that Nasdaq is battling the 25K region. Will it break out or will it reject? This is a very important area for Nasdaq right here, this whole region right here. And it's interesting that we're testing that 25K region right now during the live stream. Man, I talk too much. I need water. If you're still here and watching, thank you everyone for tuning in and watching. Make sure that you hit that like and subscribe to the channel. We do appreciate every single one of you tuning in here. Super happy to have you all here. If you have any questions, you need help with anything, any chart request or anything like that, let me know. Right, okay, so on Nasdaq, we can start with the daily. I remember posting this. I believe I posted it on X Friday, like early Friday, and I said Nasdaq looks really good for a move higher. I wouldn't be surprised to see us trading above 25K next week. And it happened much quicker than what I anticipated, and I kind of wish I got in and bought that move. But as you can see, the the late trading, the last hours of the Asian session was what pulled this higher. Unfortunately, I don't trade there in that time. So yeah, very, very interesting move here on Nasdaq. Now, what's crucial with Nasdaq here is obviously that we're hitting that range EQ area right now, the middle of the range, and it's right now acting as resistance. We see that gap to the upside and price came lower, bearish price action to start the session. The US market, I believe, is opening. Has it opened now or is it at 1 hour? Let me take a look. Where is the US market is opening in 40 minutes. So we got 40 minutes between the New York Stock Exchange is opening. It's going to be very interesting to see what the open is doing here, but it looks rather bearish right here. Now, if this bearish price action develops through the day, I would probably be looking for shorts. Right? It's very, very simple here. And what I would be doing on Nasdaq is I would be adding the fib tool here from the low to the high. I would apply my reload zone template, which is basically if you go into the Fibonacci template right here, you can use to add the 0.618, the 0.786, and the 0.702. And that gives you the long reload zone. And if I wanted to short this, I would short it down into potentially the 0.618 or somewhere around that wick. What we're looking at right here can go into even lower time frames. We're looking to 15-minute right now. My setup for this would probably look something like this, where the US markets are opening. We have a break below this level, and I will short it down to this region right here. So I got my alerts here, and I'm going to be waiting for that to potentially play out. Let me know, guys, in the comments if there's anything specific you guys are watching today. Let's take a look at the S&P 500 as well. See if we have anything interesting happening there. The S&P 500 looks much different than Nasdaq. Maybe Nasdaq is being pulled a little bit lower because of the sell-off in the tech sector. We had last week I had a lot of sell-offs in the tech sector, which I believe is coming from potential comments on the software industry being in danger with AI. I think people are talking about you can basically create any type of software now with AI, but I think that's a long way to go. I think AI will more help the software industry going forward than actually hurt it. But if we look at the S&P 100, if we look at Nasdaq, how the move on Nasdaq, it bounced at the range lows, then potentially looking at the S&P 500, we could potentially look at another range here where the range is basically this one, right? And then if we go into the lower time frames, very similar technicals here on the S&P 500 and the Nasdaq. But I would actually be looking at a move down here as a potential buying opportunity. So the S&P 500 and Nasdaq, they're very correlated when it comes to the intraday price movement. So it's a little bit, I don't want to really see, I want to see them aligning a little bit more if I'm going to trade one of them. All right, so before we start wrapping up here, let's check up on some of the stocks that we have. Oh, we've got a good question here, by the way. How do I apply your RLZ, my RLZ reload zone? It's very simple. So you have the Fibonacci retracement tool, right? You drag it on the chart, and then I have a template for the reload zone. So you go into the settings of the Fibonacci retracement tool, and you simply uncheck everything except 3 Fibonacci levels. You can, of course, keep the 0 and the 1, so you know where the fib anchor points are. But it's basically the 0.618, the 0.702, and the 0.786, and that's what you want to be adding. Let's take a look at AMD. This is one that I've covered, and we've had the earnings call on AMD here. Massive move to the downside, and we're now hitting its support. We came above this level in October last year, and it has bounced every time within this area. And for AMD, this is something that I'm really liking right here. And you can trade shares, stocks on Prime XBT as well. And if we're going to be looking into that, or if you're actively trading that, we have Cisco, McDonald's earnings on Wednesday. And then, well, we don't have all of those stocks on the Prime XBT platform, but we do have. So the idea here is that we do have a lot of earnings coming out this week, and even though we have one earning for one company, it might be within that sector. It drives down other stocks within the sector. So you have, for example, on our platform, you can trade AMD, you can trade Google, you can trade Uber, Apple, etc. So if one technology stocks shows a bad earnings report, that might pull down parts of the sector, the whole sector. All right, let me know if you have any questions before we start wrapping this up. I would like to thank you all for joining here today. It's been wonderful having you guys in here. Great questions, great engagement, and happy to help you out if you have any other questions. Before I wrap up, let's quickly talk about the week ahead here, because we do have a lot of things happening. So today, Monday, we got the Fed Board of Governors meeting, I believe, to discuss review rates. Any signal that the Fed officials this week could move the market, especially given the uncertainty around the board's nomination and Powell's term ending in May. And then also, let's say, I think it's on Wednesday, the 11th, we have the delayed non-farm payrolls. And usually, I think non-farm payrolls usually gets released on Friday, but we had partial government shutdown. So markets are expecting around 70,000 jobs, if I'm not mistaken, with unemployment expected to hold at 4.4%. If this comes in weak, we expect more risk off, potentially bad for crypto and stock markets, but potentially also good for gold. Now, if it's a surprise or upside, we could see a relief rally, and potentially that could spill over into gold. And then on Friday, the 13th, we got the delayed US CPI data. That is correct. Now, this one is obviously huge for Fed rate cut expectations, because if inflation is cooling, that supports rate cuts, which is good for gold, good for Euro USD, potentially supportive for risk assets, including crypto markets. And then we also have UK Q4 GDP, Eurozone Q4 GDP revisions, and China CPI this week as well. And then a few earnings report from different shares. Now, there's a lot happening across the markets, and if you're only watching Bitcoin and crypto, you're missing out on all of these opportunities. All right, that's a wrap. Thank you all for joining today, and if you find this helpful, make sure to hit that like button, subscribe, and of course, turn on that bell notification button so that you don't miss the next stream. We're going to doing these live stream every Monday at 1 p.m. UTC going forward. Thank you for joining, and I hope to see you all in the next one. Have a great Monday, everyone. Take care.